This program was first broadcast on Canterbury's access media station, Plains FM, and was made with the assistance of New Zealand On Air.
Welcome to your weekly dose of the Accountology Show. I'm your host and chartered accountant, Nicole Hay, with an insatiable curiosity for uncovering accounting ideas to help businesses grow. I have so many nuggets of gold to share. Are you ready to make your good business great? Let's get stuck right in. Hey, it's your host Nicole Haig, and welcome to another episode of the Accountology Show. Today, we have an exceptional guest who's been a driving force in the finance industry for over 31 years, and somebody whom we have had on the show before. Brent Lattimore, a seasoned mortgage broker, joined us to share his expertise in helping businesses navigate the complex world of business mortgages. We're going to go through a number of questions to assist businesses looking at getting either business or personal mortgages and what you need to do to get all your information up and ready and organised to send to somebody such as Brent. It's an honour, Brent, to have you on the show again.
Thank you, Nicole.
Let's dive into the world of business mortgages.
Sounds good.
Okay, so just before we start though, we're going to cover most of what we're going to talk about today. We'll cover both business and personal mortgages, so the concepts are pretty much the same.
Yes, yeah.
Okay, fantastic. So I guess one of the first questions that we always have is, why use a mortgage broker as opposed to just going straight to the bank yourself?
Yeah. I think it always comes back to the fact that we've just got access to everyone, all the main trading banks, and we generally know what's going on in the market with each of those banks. So some banks are better than others at particular times of the year, particular times where they may be interested in looking after this type of business, and other banks may not. I think they used to call them embargoed or something, where they had, if some industries were struggling, some banks wouldn't lend to it, but other ones would. And you don't get that if you go straight to the bank, because it would be unusual for someone in the bank to recommend you to another bank. So there's that, and just if you find a good experienced broker, you need probably someone who's just sort of been there and done that before a little bit, and they understand the dynamics of what goes on in a business. So
that's a really good point, because if you were looking at engaging a mortgage broker, what are the type of questions you should be asking a mortgage broker to make sure that you've got the right one?
Yeah, I think for business, more so than probably like a residential home loan, you almost want their CV. You almost want to understand what experience they've got.
Yeah.
And not necessarily the industry that the business is in, but just in general, and in running a business as well. So, I mean, there's a lot there that a lot of self-employed mortgage brokers, but there's a lot of self-employed mortgage brokers who don't employ people. And I think that's a real key, because staff are a big part of most people's business. So you sort of need someone who understands the dynamics of managing staff, which are a little bit more difficult now than probably what it used to be a few years ago.
So are you suggesting that we're better to engage somebody that does have a team?
I would, yeah. And in some ways it's like when you go to a lawyer, if you go to a big law firm, they've got all the different areas covered. So yes, it's either that or someone who is very experienced and has been around a long time, and hopefully you'll know someone who's used them before, or they've been referred on. Like, referrals are always great, aren't they, really,
yes.
From someone you know. So
You've already
that's
got
always,
that credibility.
You have,
yeah,
absolutely. Yeah. So, but I think just diving into a little bit what they've done in the past, how did they get to where they were as a mortgage broker? Like, what path have they followed to get to? And you'll probably find they'll be quite happy to share that. Well, they should be.
What about the role of the mortgage broker? So if I was looking at getting a business mortgage, or even a personal mortgage, what is your role, and what would my expectations be of you? So
if I think of what I do, I always like to sit down with the client first and just understand where they're going, what they want to do, what they want to achieve, before we really get into the main bits of doing a loan application. And then once we understand where they want to go, we then prepare that based on what that feedback is. So we prepare that application, and then we prepare to submit it to the banks. And some banks are more suitable than others. And we don't just fire it out there to like 5 or 6 different people because they all do credit checks on you. You see, and the third or fourth bank along the line can see that you've already been to 3 others. So they're not really going to take a huge amount of interest because they're thinking, oh, well, they're probably going to go somewhere else, or they're just shopping it around. So we've always got to be a little bit careful around that. But we understand all that, like we've been there, we've done that, we know how to manage that. And it might be that we've had a client who's got a similar business already, and we know we've had good success at this particular bank. So then we'd try that exact same bank, and even that exact same person that potentially approved that loan at the bank. And it's just that experience and knowledge that you can't beat.
And the appetite of the bank as well, because does that change on a regular basis?
It does, and it gets tough when the economy's tough, like it is now, very tough. A lot of questions are being asked, and it's really, really important. Like right now, it is very important, one, to have an accountant, because we've got a couple that don't really have an accountant, and they're too scared to to talk to the accountant or to pay the accountant to prepare their application, but it's just absolutely critical. The banks are asking for quite often now projections, cash flow projections, and preferably prepared by an accountant, not something that's been made up by them. And if sales have been down from one year to the next, why has that happened, and what are they doing to remedy that now?
So there's almost a story that needs to go with it.
Got to tell a good story, Nicole, a very good story. And we can only find that out, obviously, by talking to the client and having those in-depth conversations. And I think, nowadays the broker needs to form part of the accountant and the lawyer, all 3 of us almost working together to get to the same goal. And, I quite often, before I submit an application, I'll always touch base with the accountant of whoever the client is to discuss it with them.
I think that's so critical that everyone's on the same page and working in together. I guess the biggest challenge that we probably see in the market is people coming either to us at the last minute and then going, So in terms of a turnaround time, and there's 2 parts, I guess, to this, is what's an expected turnaround time to get the whole process underway and then an answer one way or the other?
So I would, depending on the complexity of the application, it will take us up to 4 to 5 working days to prepare it. And then after that, the banks are actually taking between 10 and 15 working days to come back to you. But it's unusual they come back to you and just approve it. They come back to you with more questions. Yeah, it's so unusual, like that it just gets approved. There's always lots of other questions. Some of them are pretty silly, and where you think, really, but others are, you think, oh, fair enough. And then quite often those questions will generate a chat with the accountant, or possibly a cash flow being done, or just explanation of what happened in the financials for that particular year that the client might not know.
Would a reasonable expectation of turnaround time from woe to go, giving you all the information, 4 weeks be enough?
Yeah, 20 working days. Okay. Absolutely.
Now, that's assuming that we've got all our ducks in a row and got everything nice and tidy and handed to you to do that preparation. What, though, would you expect to be handed over? And I know you mentioned about cash flow forecasts, etc. before. Obviously, you need a current set of financial statements.
Current set of financial statements, profit and loss if they haven't been completed yet, so profit and loss for that particular financial year.
And how far back would the bank go? So if a client at this point hasn't completed their March 2024 accounts, can you use 23 and then use some draft accounts from zero?
Yeah, we can definitely use draft accounts if they're prepared draft accounts
by the accountant.
Yeah, by the accountant, correct. Yeah. We can use zero as long as it's similar to the year before, so there's been no major changes and it seems to be tracking okay. And then probably what we would require also is from April to now, like a profit and loss from April to now, so a more recent one as well. So, and sometimes the bank might go, yes, we will do this, but we need your financials completed and they need to be similar, or at least show a similar profit to what's already been submitted.
So almost a letter of offer.
Yes, it's like a letter of offer. Yeah, pretty much. Yeah. Okay. And sometimes we can get them approved without the financials at this stage, but I would say come October, which is only next month, they won't look at it unless you have that full set of
Okay,
financial accounts to March 24.
First 6 months of the financial year, you'll probably get away with it, but
Yes.
thereafter, the expectation is you probably should have a set of accounts
Correct.
completed.
Yeah.
Okay. And then what about, you've got the triple CFA, for instance. What's...
Not as bad as what it used to be. The banks are slowly and not making it as difficult. So if you talk about the expenses and, going out for your coffees and all that sort of thing, they used to be very, very particular, but the regulation for them has changed. So it's got a criteria is a bit looser, I say, and so for us now it's a little bit easier. So they're not diving so much into those expenses anymore.
And if you were to get a business loan, are they still going to ask those type of questions?
Yes,
they still do.
They will.
Okay.
And we will, because they want to know your personal expenditure as well. So it's almost like as a whole, it's your mortgage, it's your business loan, it's the whole, understanding the whole package, especially if your personal property is securing the business finance, which a lot of people do because you generally get a better interest rate for that.
So as a business owner, and I was looking at my accounts or even my bank account and it was looking pretty dire, thinking that I'm going to need to do something to get me through. So does it matter whether I'm applying for working capital or whether it's actually for a particular asset that I wanted to purchase?
So if you were just getting car finance and you weren't using your property as security, it's they're not as strict. And potentially you may not even use the bank. You just use the car as security and go to an asset finance type place. And they don't seem to... their criteria is not quite as strict, or they don't go as much into it.
But you don't deal with them?
I do.
Oh, you do?
Yep,
Okay, so
absolutely. We have access to asset finance as well, And we ideally like to use the home as security if the client's comfortable with that. But if they're quite happy to pay that higher interest rate and not want their property tied up, then, we can just go down that other avenue. There are lots of different ways we can look at it. And it all just comes down to cost at the end of what someone's willing to pay. And obviously asset finance is a shorter term than what you'd get if you secured it against your home. Okay,
and as you mentioned before, the impact of economic conditions. It's a little bit dire out there at the moment.
Very much,
things are looking at picking up. Interest rates are looking much better than what they were. There potentially could be another maybe 0.25 increase in the OCR, or decrease, I should say, in the OCR. Where do you see things sitting at the moment?
So for home loans, there seems to be a little bit more activity out there, and definitely people a little bit more active, and definitely a lot more inquiry than what we've had, and more serious inquiry, like people are seriously looking. I noticed in the paper the other day they talked about potentially house prices bottoming out, which just creates... it just creates people wanting to buy because they think, oh no, we're going to miss out, and then if that
whole
keeps,
FOMO
very much so. I haven't quite seen those, and we have had some fixed rate reductions and some not so much floating. It has slightly, but not much, but a lot of fixed rate reductions. But haven't quite seen those flow fully through to the business finance yet. But the banks are still very, very cautious around business finance and approving business finance. So that's just, tough.
And then interest rates for business finance is higher than...
They are higher. And we try and, once again, using the house as security, we try and structure it against the home, so you're getting home loan rates. And then whatever portion we can't structure on that, will be at business rates, which can be 2-3% higher than depending on what... it's a whole raft of factors. It's really hard to explain, but they've got their own sort of figures behind the scene, and then they work it out depending on the risk profile.
Yep. So are we potentially talking about LVRs and loan-to-interest ratios? And that applies regardless of whether I'm doing personal or business?
It's safe to say that the bank considers it. It may not affect their final approval, but they look at it as a whole, and they look at all those different areas and where their almost like their safety points are. There's a higher risk as an unsecured loan under the business here, but they're very well secured and very comfortable under their own home, and maybe the partner or has a full-time job and good income. So they've got a little bit of a fallback position there. All those
relationship partner as opposed to business partner.
Correct, yes, relationship partner.
Yes.
And so all those factors all get taken into account when the bank's assessing it. So if you're fully reliant on the business income, it could be a slightly different outcome if you're not fully reliant on the business income to keep paying your home loan and keep the kids fed and clothed and everything else. So it's just worth, it's always worth making the phone call, having a chat, and we can quite quickly work out by asking a few questions where it's potentially going to sit. But they look at it overall, but not necessarily taking those factors into account for the approval, if that makes sense. Yeah.
So if I was to, as a business owner, gathering everything up to send to you, I would be looking, like we said before, at maybe financial set of statements, depending upon what time of the year it was, maybe some up-to-date zero management accounts, cash flow forecasts.
Yes, preferably. Depends how well the business has been performing. If it's dropped considerably, or then definitely cash flow forecast.
Is that something we should be, business owners should be reactive on? I mean,
yes.
Ideally, businesses should have this in place anyway, but if you are one of the ones that don't have this in place and don't have an annual cash flow forecast and are not measuring and monitoring that, then you suggest just be reactive and wait until the bank requests it, which is obviously going to take more time because then the accountant needs to prepare it.
Yes, I think if you know you're going to need money moving forward at some point, and it could even be next year, you sort of want to plan for that. And this is why it's so important that the broker's involved, even if nothing actually happens at that point in time, that we're involved to go, look, this is what they're looking for, this is what you need to do. So, in the good times with the economy and everything else, the banks are quite a lot freer with their money. And sometimes it's worth getting things set up properly then for when things do. And what I'm talking about then is like a revolving credit type facility or an offset, which means you've got the cash there, but it's offset against your loan. But when things get tight and then you go cap in hand to the bank and they go, sorry, you've actually got the funds there already. So it's preparing for a rainy day when it's sunny, I think I put in my thing, but just making sure that, and this is why, sometimes we are like, they come to us at the last minute and you're looking at it going, well, we might not better help because it's a little bit late now. Probably should have done this, and this over the last, 5-6 months or whatever. So I think from that point of view, don't be afraid to get us involved earlier on, even if you think that it's not going to be worth our while, because it's just setting up the right steps to get where they need to go. And because a lot of them, if they're doing cash flows, it means they've got growth forecasts or they want to employ more people or they know where they want to head. And so then you've got to plan for that and make sure that we're...
And of course, with a revolving credit, it's really important that you speak to your accountant about that because some of that may not be taxable as well. So that you've got that issue to consider.
Correct.
If you're pulling money out for personal use, but maybe you've got it secured against the business, don't think that what you're pulling out is going to be deductible, the interest is going to be deductible for tax purposes.
No, exactly. And the other point, probably more for that, is that if you have the ability to get a $100,000 flexi now, revolving credit facility, but you don't actually need it right now, then maybe you should take it.
And there's no cost with that?
But no. So it's just having access to the funds, but not actually requiring it. So it's like applying for a top-up and not needing it right away. But it's just there as a backstop, basically.
Okay. Okay, now I guess one of the questions is if I borrowed money and then business went really well and I wanted to repay it early, that repayment, asking the question up front of will there be any penalties if I repay this sooner or later?
That's always a hard one because people who want to pay their loan back early, the business loan, I always say, well, talk to the accountant first. Please don't do it until you've done that because maybe it might be better off going personal side.
Correct.
And I always struggle because sometimes if a client pays that loan off too quickly, it's probably guaranteed they're going to need it back. at some point, and then we've got to go through the whole process again of doing it. So I would rather restructure that. And some banks do the business flexies as well, so you can actually have a business flexi where you pay it off but draw it back. And of course you can have a personal flexi. When I say flexi, it's a revolving credit flexible facility. So once again, it's that structure, and it's almost like when you borrow money, come to see us, but when you want to pay it off, come to see us as well. Yeah. Because I'm not a big fan of doing it. As much as I understand the how positive it is to do it and how much interest you'll save and everything else, but if you need that money back,
and I'm just going to explain that a little bit further from a tax perspective. So, if you've got a business mortgage or loan, the interest component is deductible for tax purposes. The repayments of the principal is not. However, if you've got a mortgage or a loan in your personal name, the interest on that repayment is not deductible at all. So from a structuring perspective, it may be better that you retain the business mortgage or loan as opposed and then repay the home one if there was extra funds available. But there's a whole lot of other things to consider there as well, like overdrawn current accounts and where you're taking the money from, etc. But overall, yes, and that's...
And I think that's why they need to talk to you, because it's just so critical, and that's why we always send them back to the accountant going, let's just cover this off first before you do that.
And I had a client recently who asked exactly that same question and said, look, I want to take a lump sum out of the business to repay off my personal mortgage. Okay, fine on the face of it. However, there were so many things that could have been affected, and one of them was an overdrawn current account, which then includes interest being charged on the overdrawn current account. And then do we consider paying out a dividend? And then you've got some RWT that needs to be paid on it. So as easy as that sounds, I've got extra money sitting in my bank at the business, so I'm just going to take it out, repay my personal loan. There are so many implications, so it's really important that you do speak to your accountant first before just taking that money. You could end up in a bit of a tax mess.
Well, I think they just see the interest saving on the personal, and that's it.
And that's it.
Yeah, not realising the implications of everything else.
Okay, and what about then? You said before about, come to us early if you can, even if, it doesn't end up going ahead. A lot of people may think, will that cost me?
Yeah, so look, most of the time the bank pay us, okay? And so when we arrange finance, definitely residential, we're paid by the bank. Some business loans we're not paid by the bank, and then we will invoice the client accordingly and always let them know if that's the case or not. So, in short, I guess, if I spent an hour with a client and nothing came of it, but we were pre-planning, I wouldn't charge them for it, because the way I look at that pre-planning is it's going to save me a lot of time later on, because we're preparing them for their application effectively. So it's all part of that whole proposal. But if what they're requiring from us does not, it means that we're not paid by the bank, then there will be a cost to that, and it just depends on the amount of time that we spend. So some clients I do invoice directly, and they're well aware and they're happy and they're fine, whereas other ones I don't need to. So if the majority of that business finance is arranged under the home loan, then we don't have to charge for that because we're paid.
Okay. Well, we're coming to the end again, so there's so much more that we could discuss.
There is.
So many more questions.
So quickly.
But that does wrap up another enlightening episode of the Accountology Show, and a huge thank you to Brent Lattimore for again sharing his wealth of knowledge on business mortgages and, of course, personal as well.
Thank you.
So we've covered everything from the latest market trends and economic factors to navigating loan options and avoiding some common pitfalls, such as not even getting your accounts ready on time, which is imperative. So Brent's expertise will certainly help business owners make informed and confident decisions about their financing. Brent, where can people follow you today?
To talk to me?
Yes.
Yeah, so probably on the Apex Advice website is probably the best one. They can look up my details.
So that's apex.co.nz.
So it's apexgroup.co.nz or email, I guess, is always good. Do you want me to give that? Yeah, it's Brent L at apexgroup.co.nz.
Okay. And as we discovered last time, not really social media.
I'm not a big social media person. No. That's just not my thing.
No,
that's
and that's absolutely fine. Everyone will be able to find you either.
I think if you Google search my name, because there's not many Brent Lattimores in Christchurch. Lattimore.
Yep,
I'll
great.
definitely come up there somewhere.
Okay. Wonderful. Thank you so much again for sharing your expertise. You've been an absolute valuable asset to have
Nicole.
here on the show, and hopefully everyone gets all of their accounts ready on time and their cash flow projections in case something does come up. If it's worth seeing.
Which it will do.
Yeah, exactly.
Always.
Exactly. Okay, wonderful.
Okay, thanks,
Thanks, Brent.
Thanks a lot.
Thanks for joining us on the Accountology Show. If you have enjoyed today's show, you're in luck because we'll be back next week. You'll find past episodes at plainsfm.org.nz and subscribe on Apple Podcasts or Spotify to never miss an episode. We would love it if you would leave a 5-star review and tell a friend or business owner who would benefit from hearing our show. We also love hearing from you, so reach out with any comments or a topic you'd like covered, and even suggestions for whom we should get in the studio next for an interview. You can find us on Facebook, Instagram, LinkedIn and TikTok. Our handle is NH Plus Associates, that's NHPLUS Associates, or email me, nicole@nh-a.co.nz. But most importantly, thank you for taking the time to listen to the show. Until next time, keep building that business into the empire it absolutely deserves to be.